Welcome back. If you are just joining us, this is INX Prime Live. Remember, we are on your screens every single Monday to Friday from 6:30 to 8:30 p.m. Now, with it being a Wednesday night, it's important for us to get into our generational wealth education segment. Now, today we're talking about tax. Countries like Japan and Denmark tax personal income at 55.97 and 55.90% respectively, while in South Africa, the amount of tax paid depends on your salary cap for the year, with tax starting at the threshold of about 91,250 for people that are under the age of 65 and 141,250 for people older than 65 but younger than 75 per annum. Now, we're also going to be touching on everything and anything to do with generational wealth. And today we are joined by a tax specialist by the name of Natasha Lorde. Natasha, thank you so much for joining us this evening.
Thank you for having me. It's fun to be here.
Thank you so much. So, a lot of people know you from social media, right? So you do run this very popular and very well-known account called Tax with Tash, which has a lot of followers as well. So congratulations on that. But let's start off and talk about South Africans and South Africa. What do South Africans pay when it comes to personal income tax?
So there are different ways that people in South Africa can be taxed. When it comes to personal income tax, it depends if the person is running a sole proprietorship, so they have their own business, or you can even have a hybrid system where essentially you are fully employed, but you also have something on the side. And so you'll have personal tax rates, but applied differently. And that's in the personal sense. And then in the business sense, you have different types of tax regimes. And you can basically be incentivized in different types of ways. But there are many, many different tax rates. South Africa has a residency-based tax system. So it's a sliding scale of between 8.0, then 18%, all the way to 45%.
Wow, so 45% is more seen as like super tax in that sense.
Yeah.
But let's just touch on the importance of, paying your taxes and having your taxes in order. We know that it is quite an important thing, but what are some of the repercussions on not paying your taxes?
Sure. So we're seeing so much happening now, especially with the commissioner enforcing more data collection and also a lot of enforcement. So we saw about 10.3 billion being collected, more than what was budgeted for. A total of about 1.69 trillion in tax rands was collected. And that's big jump in that was because there's a lot of enforcement of compliance. So we're seeing a lot of people getting auto assessments. We're seeing a lot of letters being sent out, and we're also seeing a lot of garnishing of the accounts. So SARS can now be like, listen, you've got extra money that's not been declared. Where is this coming from? We're going to kind of just make an assessment that you don't have any deductions on this, and we're going to take what's ours. And so they're going into people's bank accounts. They're attaching assets. I think we've seen popular people's furniture being attached, houses being attached. So I think this plays a lot into the generational wealth conversation, that you can purchase properties and you can purchase houses and you can purchase cars and you can have all these assets, paintings. But if you do not make sure that your taxes are in order, you could find them really in a space of being threatened for being taken. And that again talks to how you structure your life, if you're going to have trust, if you're going to protect yourself and what you keep in your personal name. But it's getting really enforced now.
Brilliant. We are going to talk a lot more about trust in particular, as well as generational wealth. But let's talk about this term that is becoming quite popular now, but it wasn't popular 5 or 10 years ago. So, we have a lot of SMMEs in South Africa. We have a lot of small businesses. So we hear people talking about business plans every day. You hear about people talking about financial plans every day. But let's talk about a tax plan. What is a tax plan?
So that is literally a roadmap for how you're going to deal with your finances as you live your life. I think everybody needs to have a tax plan. So this is going to talk about the decisions you're going to make. Are you going to be in a relationship? Are you going to be married? How are you going to be married? How does that affect your taxes? Are you going to be investing? Are you going to be buying property? Are you traveling? Where are you going to be living? Are you relocating? All of that is a life that you're living that creates tax events. And if you don't plan for that, it's going to catch you on the back end of that. And then you find yourself in a position that you didn't plan for and that you didn't necessarily involve in your financial step. And so you think you have a little bit of disposable income, but actually you need to pay taxes. Or you think you've bought an asset, but maybe you've bought a liability or an expense. So it becomes really a conversation of saying, just as you have a business plan, to know how you're going to run your business in order that you have a successful venture throughout the year, and you're not just kind of shooting blindly. It's the same thing with most people. Most people don't know about their taxes, and they're afraid of their taxes, and they don't. even know how to go about it, which taxes should I pay, when should I pay it, and the tax plan just encompasses all of that. When do I pay taxes? Which types of taxes should I pay? How much do I think should be the amount, because I'm speaking to a tax professional? And then what can I write off, or how can I optimize my taxes? Otherwise, you're probably going to be paying too much.
True. And it's important for us to have those conversations when it
Yes.
comes to, looking at your taxes and how to reduce it. But let's just talk about the whole idea of financial planning. Now, people say financial planning is very similar to tax planning. They do sound like they complement each other, but there is a difference between the two. What's the difference between a tax planner and a financial planner?
So financial planner is going to take a lot into account. That's going to be your estate planning. It's going to be optimizing your personal finances. And they're usually products assigned with that. So you're going to be talking to your different corporates, or taking out different insurances, or you're going to be having different policies. And that's simply to insulate and bolster your financial life and well-being. So financial planner will help you maximize your actual money and your spend and where to put that. Whereas a tax planner will help you understand that as a result of growing your personal portfolio, there are certain tax implications that come about of that, And so the tax planning is really to make sure that whatever activities, income-generating activities you're engaging in, you know the tax that's associated with that. And you also find ways to then optimize that. Where are you generating the income? Where is the tax going to be generated? How much is it going to be? And so you plan for that going forward. But financial planning is more on the generating income side. And then you've got the tax coming in, and they do really marry each other very well.
Brilliant. So we are getting a lot of questions coming in from social media. And one is from Jason in particular. Now he is chatting and asking a question on the difference between tax avoidance and tax evasion. Let's have that conversation.
Okay. So I think it's so crazy when it comes to taxes or finances. People are also kind of afraid to talk about it, but they're also afraid to have hacks when it comes to it, because it's always traditional and we need to do things the exact same way, and so people don't really like to take risks. When it comes to the avoidance and evasion side, you're going to have one that is legal and one that is illegal. There's a purposeful way that you are essentially defrauding the system, which is tax evasion, and then there's a legal way that you basically make use of the specific legislation that is applicable in whatever jurisdiction you're in. And so tax avoidance is something that you can use. I do think it needs a rebrand, which is, I think they should just call it tax optimization or something else. But
sounds better.
It sounds better, right? Because tax avoidance just sounds really dodgy, and nobody wants to say, yeah, I'm avoiding tax. It's just like a weird. But if you say I'm optimizing my taxes, it's a lot better. And it's always legal. And obviously these laws and everything that's in the tax plan or tax act is there to help essentially incentivize behavior and disincentivize behavior. So when you were saying, there is a tax credit for solar or renewable energy, it's to incentivize the population or the country to do something that the country wants to have happen. Or there's an incentive for saving, that's something that helps, but it also reduces your taxes. And there's a disincentive for not paying your taxes on time or not filing your taxes. You get penalized. So that also helps steer behavior. And if we understand that, then we don't look at tax avoidance as a selfish thing. We kind of think that we're playing into what is already a framework that the government wants more widely adopted.
Perfect, Natasha. Just in closing as well, there's a lot of young people that look up to you, just in terms of advice when it comes to young people. What advice can you give to the youth of South Africa? I mean, a lot of them are starting up businesses. A lot of them maybe perhaps just completed their university degrees and are looking to start up their first jobs. Yeah. What advice do you have for those young people right now?
A lot of these things that we learn in life are not taught. And I think especially for young people, don't wait to be taught. Take charge of educating yourself and empowering yourself, because that is something that you have within your control and that you can always improve upon. And don't feel bad or scared to ask questions or to discover or to find out, because ultimately that's what we're all doing and it never stops. So that would be my advice.
That's very powerful. Natasha, thank you so much for joining us this evening.
Thank you for having me. It's fun.
Awesome. That is Natasha Lorde, who is a tax specialist, just telling us more about generational wealth, but also just notifying us about the difference between tax evasion, tax avoidance, and everything and anything to do with tax. Guys, now we are going to take a quick ad break. We'll come right back.